Hello, West Pacific Market Analytics. This is Glenn here. Been really busy with a lot of projects around my ongoing project. And not going to get too much into this, but I've been working with some client-based analytical work in helping individuals with their portfolios and doing analysis of what their holdings are and giving advice on buy points and sell points and restructuring of their portfolios as we head into what's coming ahead. You want to get a hold of me, of course, I've given my email out in the past. We're still very, very active daily on the Discord member site. And so everything's been ongoing there. Even though I pulled back from YouTube, I'll still put a video up here until I can have more time. I want to do this month end just to bring you all into the fold of what we're seeing. And again, if you are interested in the Discord platform, I'm still keeping that very active. And that's at destinytrading@gmail.com. That's DSTNY. And then trading, TRADING @gmail.com. It's on the other videos if you want to get a hold of me. So please do that. So let's just get into this really quick. Let's not waste a lot of time here. Let's push forward with this. So the first thing I want to show you here is this particular data set. I don't even want to call it a model because I think it's interesting that Larry Ellison came out and said something that I thought really stood out. And he said the problem with AI is it's just taking data sets off of what already is existing on the internet. So he doesn't see it as really being able to offer anything that important. He says the future is going to be in prioritary or individuals that have data sets that they're just simply not going to put their work on the internet. And that's what we do here. We do data sets that have nothing to do with anything out there. This is all our own work. And it's not something we're going to readily just put out there. So you're going to see some of the best information. It's going to rest private. And it's never going to be put on the into the AI streams. And Larry Ellison said that is really what you want to be chasing. You want to be chasing the priority information and not all the gibberish they're cranking out in the AI models, which are really the difficulty there, as one mathematician said, that you can have 1,000 ideas that you can get out of AI, but out of that 1,000, how do you sort out the 999 that are absolutely useless or fake or trash or not real? I mean, look at today, right? You go on YouTube, you go on Twitter, you go anywhere, and you're just asking yourself on everything you're looking at, is this an AI fake? Was this created by AI, or did this really happen? It's already there. I mean, you literally, the question comes up, what is trust? You can't trust anything you're looking at. Do you think you can trust anyone now that's putting out trading information? And they're telling you, oh, this is great stuff, it's created by AI. You can't find the truth in anything. So what is truth? Anyhow, enough of that. But look at here. You see this red rising. Until this red rising stops, this market's going to keep going. This has to stop. And you notice now that this signal has come to full focus up top here. Now let me show you something. Notice how this model looks. I call it calm, right? You see how everything looks calm? This is just rising really nicely. The trend is just rising really 48nicely. But the problem in this model is right here at the dot curve. You see the plunging dot curve. And when we hit this low here at 4835, and we hit this low right here at 5119, this was a save and this was a save, because this cannot be, this red needs to price back down here. So the higher we go, the more we're overpriced. So I'm not thinking we're going to get too much higher, but we'll talk about that at the end of the video, what my thoughts are on that. This is the exact same model. In other words, nothing has changed from that. You notice how it's calm to this. Now look at here. Prior to the 2000 top, close all this out on the right side and look at how this looks, just like that last model. Look at this. Rising velocity, topping out on the curve here. You see the blue dot curve popping up a little, and then everything changed. But again, look as it came up there. You notice rising velocity, everything calm, the red just rising. Now let's go back again. See it? Dot curve, everything rising, velocity came down, we had a corrective move, velocity came back up. We've changed nothing in the model. So what's going to happen is at some point, this calmness is going to go into panic. And lo and behold, look what happened. We came off the 2000 top out into 2003. Absolute panic. You see how it called the hold down move here in the S&P? from calmness to panic. So that's what we're going to be looking for, right? Nothing's going to happen until that tops out. Should have seen that a long time ago. Now, what I'm thinking here is this idea of velocity of a long-term momentum speaks to a paradigm shift ahead. Now, what do I mean by that? Well, we look at Moo, right? If I understood all this years ago as I've been working all this, if I even understand it here when I was already far along in the progress of this project in 2020, but I still didn't fully see it and I didn't understand what exactly it had to do. And I do now. I understand everything in the data modeling and the rules. But you'll notice that Moo had to go here. It had to finish its rally right here. It's in a final blow-off top. Now, what do I mean by that? Well, you'll notice that when we go all the way back here in this particular view to 1994, we had this big rally up to the 2000 top because you notice that the V channel was down here, right? It was rising. So in other words, velocity was building. And then it had to correct back down. And you notice it went here from 95 all the way down to $1.55. I mean, this was the internet age, right? And Moo went from 95 down to $1.55. So it's going to be interesting up here at 900. What's going to happen ahead once this whole data center boom blows off in the next few years and they find out there's no usage for all these data centers, that nobody can pay. It's too expensive. They cannot recuperate their investment. They're throwing it out there, but that doesn't mean they can make it pay. So you can see we had to go here, right? And you notice once we had that corrective move, then we just started to move right back up the velocity curve. But that's not what's important. What I want to show you here is notice the breaking curve here of the directional circulation. So you notice here it's starting to slow down out here, 2016, 2017, but it's still rising. But notice as we rise more and more and more, it starts to curve and peak out. And the momentum top here will be right around 2031. Now, that doesn't mean price can't come back down here, below $100, which it's probably going to do. It'll probably price back down in here somewhere at some point. I'm not playing around with this just yet, but it's going to be interesting. It's still not done. But at some point, it can break back out of the velocity channel because it only can price in the velocity channel when there's trend. And there's trend right now, so it can price there. But at some point, you can see that the pink line mock, as this then corrects down, which it will correct down here soon, will then begin to pull down on the mock. So we're going to watch that. So you can see the velocity channel now is peaking out. So what this is a reflection of is ending inflation. Well, what do I mean by that? Let's go forward here. I missed one slide. Let's go back. So look at AMD here. Same idea, right? Back here, 1994, pricing right here in the V channel, big corrective move, 48 down to $3. Here in the 2000 corrective move, stayed in the V channel, fell out of the V channel, and then worked sideways until 2015, $1.62, $1.61, and is now gone to where it had to price, right back up here in the V channel. Now notice the same idea, right? Rising velocity, which is a measure of the momentum of the market. And I see the semiconductors right now as one of the key measures of technology and one of the most important parts of the market. Now, I've been talking to my members about the momentum in other sectors. The housing sector, which is really important to inflation, the commodities, the insurance sector, which is a big component. A lot of these different sectors, and we're looking at that too. But you can see the same idea here. We've already got the momentum top on AND, which was right here at about 2024, and it's now curved over. But the mock has formed a little cup here. And so we're priced right now. So it's going to be interesting. I wouldn't play with any of these. These have got to all top out, and they will top out. And I'm sure soon they're going to have a very big corrective move, and that's something we're looking at because there's a nice way to short AMD, but you don't want to be early on it, that's for sure. So again, you can see the momentum here. The momentum is waning. And we can see this finally in gold, right? I mean, if you want to look at anything that measures inflation, it's gold. So you notice, look at gold here going all the way back to 1980s. We had the velocity moving up and the velocity peaked in the metals here in 2010, right up here, right? but price was still below. So we continued up, and then we put in this beautiful pattern that started here in 2009, 2010, this cup handle, and then the extension in a nice cup and handle. So in other words, it had to do that because here it's forming the cup, it's then forming the handle right where it had a price here. You see it in the velocity channel. So we've gone from a rising velocity to collapsing velocity. It was rising inflation to inflation peaking and inflation starting to wane. But technically, gold had to complete this pattern, right? So it's kind of a reflection in a way to me, gold, of ending inflation. This is done. We're not going to see a higher high than this 5,600 here. That's as high as she gets because gold needs to price back down here at 1,800. Now, it's not just going to collapse straight down. It could, but until the trend breaks and the trend comes down, that's not going to happen. It's not going to happen overnight, but gold is done up here. So gold is going to be, I think, a reflection of the next thing to come. So in other words, we're seeing ending inflation. And so what I wrote down here, it all points to ending inflation, which can lead to a deflationary depression caused by a severe collapse in aggregate demand. And aggregate demand often triggered by a major financial crisis or the busting of a massive asset bubble. Massive asset bubble. Well, $40 trillion, right, in printing. We'll look at that in a minute. And then asset bubbles and we're the bursting of widespread asset bubbles such as stocks or real estate. Both are in bubbles. It'll instantly destroy billions in paper wealth, and then that'll cause a sudden, dramatic drop in consumer and business spending. Well, a dramatic drop in consumer and business spending, wait a minute, isn't that part of AI and this destruction of all these jobs? Yeah, they know what's coming, okay? Part of why they're doing the AI is not so much they want to eliminate jobs. They have to eliminate jobs to survive. All the big corporations and the government are going into survival mode ahead of this coming deflationary depression. And that will drastically reduce the money supply and credit. Okay? So you say they're going to increase the money supply. No, it's going to drastically reduce it. And it's going to trap the economy in a devastating cycle of falling prices, mass unemployment, and deepening economic despair. Now, I'm not saying we're there right now. I'm talking in the coming couple of years here. This is going to take time off of this blow-off wave 5. But those three models are speaking to me of finishing velocity of inflation. Okay? Now let's look at some technical models. We can see the shorter term technical model here, right? 2025 here, 2026. And you notice how the markets continued to rise here because you notice, again, we had a price up here, right? And we're only now, in this particular model, you can see we're starting to get a momentum top. So I think going out here into June, early July, we're going to finally see this thing finish, this blow off, and then begin to correct. So we're getting close now. We had to go here, right? So in other words, down here, back in 2024-25, this was still above. So we're rising. We had this big corrective move, but this was still above, right? So up it went again. Now I've come to realize that until this is below price, price cannot correct. So once we get this thing to break down and then this momentum top to form and this all to start to collapse, then this can start to then be in a falling V channel. So there's a lot of technicals like that we got to look at. Now here we're looking at the bond market and the spread. The spreads in the bond market. And we can see the spreads in the bond market. You notice here back in 2009, the spreads in the bond market got out of control, had a huge spike, and we had that big move down. So when this rises, the market doesn't like it. And you can see that here in 2020. You see that big spike up. It finished. There was the finish there, right? There was the finish there. And once we start to come back down, the market can rally. We start to come back down and the market took off again. And you notice here in 2020, we had another spike and there was your corrective move. And so since the low here in 2020 on the credit markets and of bonds, the credit markets and the spreads, so we're looking at a lot of this and we're going to look at another model later. We are looking at the spreads and the rates and all the rest when it comes to what's funding this, the debt. What's funding the debt? Because that's going to impact the banks. That's going to impact credit, which is part of what we just discussed. So we can see all the signals now have come to a focus here, right? All of them. So this is going to have to turn before we can say this is done up top. You can see that little corrective move we had in 2025. You see how it spiked? But the signal didn't change. So we're watching this, okay? This idea of all of that. Now, this model here is at record lows never seen in history. This is record all-time lows in yields. So in other words, the higher this is, the cheaper stocks are. The lower this is, the more expensive. The stocks are the most expensive right now in history, into near 40 trillion in debt. Now we had a little bit of a difference here. You can see this has gone to a new low, and back in 2000 it was a little bit higher, but we only had 5.7 trillion in debt back then. And that was a record low in yields, and that was the top in the market. And then you notice when it moved up, the market corrected, came down. You see it kind of coming down and chopping around, market rallied, and then another big spike up as velocity was rising, first correction rally, and then the second correction. And then you notice off of this spike high where yields had risen so high that made stocks cheap here. And then we've just been kind of chopping our way down ever since 2009. Now, every time we had little spikes, you see we had little corrective moves, right? Spike, corrective move, spike, corrective move, spike, corrective move. But this is not conducive of this market getting much higher. Not going to happen, folks. Now, let's look at the world here, because it's not just about the U.S., is it? And the yield, the world model is still finishing off its momentum top. So you can see going all the way back here at the lows in 2023, the signal's just been rising. Look at that. We had a bull cross here, February of 24. And man, these things have been right. It's so simple. It's so simple. Glenn, why could you not see it? Well, I could see it, but I couldn't feel it. And again, it's that question, what is trust? No more. Not only can I see it, but I can feel it now. And you know what? Feeling it is more important than seeing it. But you can see. You can see here, and I can feel it, that again, the velocity's momentum in the world is peaking. So nothing can really happen until this indicator finally decides it's done up here, right? And it starts to work its way lower. Now let's look at this model I call debt instruments. Debt on top of debt on top of debt. We were talking a lot about this past week over on the Discord channel. I put about 10 models of this debt instrument model. And they've really just gone crazy with debt instruments since we had the lows in 2022. So you can see with this red, which was our measurement of the debt funding of debt instruments, that since then we came here. Here's the market low right here in July, August, September. We're in blue here is the market. And then notice this only here started to measure the curve of the trend. And you notice we had a little corrective move here. We had just this little corrective move here in 2000, this little hiccup in the financing of debt. So whenever we get a little red, you see we only had one red spot here. We had another red spot here on that little corrective move we had here in the beginning of 2026. That little red move, cross right there was enough to push the markets down. Doesn't like that. So it'll be interesting to see, because you can see if we run a curve up the trend here, it gives you the same kind of idea. Now notice we've reached all the way up to the very top between the directional circulation and the momentum of circulation. We're all the way up here. Now that doesn't mean we cannot continue to creep higher. We can. It just means that the rate of change of the market moving higher is going to slow now. And we could even get another corrective move. And we don't even necessarily have to fulfill this dome top. But if this trend wanted to continue, you can see that now that from this point on, and we carry this out, that we in this year and then next year, it looks like it tops out here right around the second quarter of 27, that we now are seeing waning velocity in the trend, even in debt and credit issuance. So we're just not going to see the same kind of climb up and the moves up in the market. Here's another model of that. You notice how just small trend breaks. So see this trend break right here? Look, there's one red down right there, right? Here's that corrective move all the way back here. Look at it, in 2023, you could see this was a false move because the trend on the debt instrument model was still rising. We had one little red speck there. And so it had to come back up. And then it came down again. It had to come back up because look, when we had this little corrective move here in right at the start of the second quarter of 24, we didn't even get a glitch in the trend. You notice how we got a little glitch in the trend right here? We got a red bar. We had the small move down, and then up the trend went again. And notice then we finally had this corrective move in early 2025. First, the trend started to break. And as the trend broke, the market started to break. Then it collapsed and we had a really big red stick. But the minute that all stopped, look at the trend stopped right here, just before the market low. And lo and behold, debt said, no, we're still going to keep printing debt. We're still going to keep issuing credit. And up we went. And there we go. Here's our little corrective move we just had here at the beginning of 2026, like we had at the beginning of 2027. And it only, look at it, broke. Couple little red bars, and it said, nope, not done. And up we went again. Incredible, huh? How you can measure this. So look, here we are short term here, all of May and all of April. And look what the market does in this model. Signal opens up right here. And up we go. Look at the little bars here, right? Up and up and up and up and up and up. So until that breaks, and you notice the market in blue here just following right with it. So we've got lots, and I shared about 10 of those models, some that were even more interesting over on the Discord channel. Now let's look at this one. You notice going back here of a data model. You notice here in 2000, even though we had this corrective move, you can see it coming down with the trend. You can see it coming down with the velocity. Notice the market moving very, very nicely down here in the velocity, but the signal's still above because this, even though we had this corrective move, where was the velocity channel? Above, right? So we corrected and we knew the market had to go higher because we still got a rising channel, right? Here's that corrective move. You notice big move down in velocity, big move down in trend, move down an indicator, move down an indicator. But where was the channel? Above. So we had to keep rallying. And we finally reached the momentum top in 2015. So momentum started waning here in 2015. But we had to price in the channel, and we did right here to 2018. But we can get these blow-offs outside of the channel. So this is now telling us this is all an overpricing now. So we're not going to be able to get much higher here. But you notice our indicator here has not broken down yet. I mean, look at, there's a breakdown, right? You see it here? So we got a lot of technical models like that we're looking at. You can see it in this model here, same idea, right? Here's 2026, where we're measuring here. You notice how perfectly we're following the trend, and the trend starts breaking. And look at how the price came down with the trend. But what was wrong here? What was the rule? Where's the V channel? Where's velocity? Where's the momentum? It's up here. Look, it's still rising. So we had to come back up. And what did we do? We rallied right back up into it. Now we're going to have to see, right? Is this going to continue? And are we going to finally get it to top out here in June? And eventually this mock signal and this big signal you saw here. So see, first the trend broke, then the signal broke. So we got to see the trend break, and then we got to see the signal break before we can talk about any kind of a top out. It's all about velocity and its momentum. Now, we talked a little bit about deflation. Now, what leads deflation is a fast move down in housing. So we're watching housing, and housing's looking real interesting right now because you notice this head. This is the market, and look how perfectly housing follows the market, right? Go back here into the little corrective move in 2019, and lo and behold, housing was correcting, right? Rally up, and lo and behold, housing was correcting because what is housing pricing in? The velocity of momentum's channel. So every time it gets up towards the top of the channel, it wants to try to revert back down. So you see it here, and then again, but it came down to this low, but the channel's above, and up we went again. 2022, down we came. We didn't get that far, and then up we came. But we put in now, this is a head formation. This is a shoulder. Now we're putting in a right shoulder over here with the trend breaking aggressively. And notice that the velocity is starting to drain in the housing sector. We're watching that. Now look at this idea of a parabolic blow-off. This is a parabolic blow-off, and that can be dangerous. We're going to have to see how this unfolds. And you see our red indicator here again, coming down here, 2020, coming down here, 2007, 2007, 2000. And you see these little corrective moves with the market. There's our 2020. Didn't look like anything. Here's our 2022, pretty nice looking. Here's our 2025. And we've gone parabolic. Parabolic. So we're watching for these parabolic signals, just like that one I showed you at the beginning, to break down. Now here is a model of our famous carry trade. We're watching currency. The dollar looks ready to have a major corrective move down. They're going to keep devaluing that dollar. It doesn't have a choice because everyone's bailing on America, the debt machine. It's just not pretty, these guys. They just can't stop spending money. Now we want to build bases on the moon. We're building, we want to go to Mars. We're just spending money like there's like a drunken sailor. Nobody talks about fiscal responsibility anymore. Do you hear it at all? Party on. And a big part of it is we got the interest rates on the 10-year in Japan now getting close to what, 3%? That's not good in an economy like Japan that's got a ton of debt. So we think we're done here. Look, we hit the pink line finally here. You notice this finishing wedge started all the way back here in 1991. And it now has finished the move at the pink line. Now, what is that measuring? Well, it's measuring when this rises. That is not good for the market. A rise means the market will go down because money is circulating back to Japan and selling the trillions and trillions of dollars that's invested here stateside. So if this starts to move up, and it doesn't take much, look, here's the 2020 corrective move. This little spike right here is enough to make the market go down. And you notice the bigger move here in 2007. You see it rising. Here's the sell-off in 2000 right here. And you see we rose, right? So this is way, way down at the bottom. Let's move on. So we're watching it. Here's when the Tesla IPO is coming out. I put Tesla because it's not really Tesla. I should say SpaceX. SpaceX IPO is on the 15th. And then it's going to get real interesting in the lockup period on September 15th when $2 trillion worth of stock is going to unlock. That's going to be something to really watch. That's going to probably be an interesting time in the market. So we're going to have to wait that long for the bigger corrective move? I don't know. Anyway, you could see this is the carry trade model we're looking at here. And you notice here we were rising up. And we had that sell-off. So notice at that low at 6,300, we topped out and we collapsed again and up we rallied. So this plays into it as well. And this is Japan. This is their market. And you notice we've now broken out above the directional circulation. Here was our momentum talk in Japan all the way back here in 2014. But remember, Japan is tracking the US because they're funding us. We had to price into the X point, I like to call it here. And then we've had this blow off. So we're not going to be able to get too much higher here. And you can see velocity is now draining in their country as well. Big technical producer. Here's a model of the S&P. I got a rule called pink to black. Look at, we're at the pink line trend here. You notice here we're coming right down beautifully in the 2000 corrective move. And the channel, then we came up, we came back down to the channel. And usually once you hit the channel, we hit the channel here, you go back to black, we hit the channel here, and look what just happened last week, we hit black. Now that doesn't mean we can't continue to bump up for another few weeks. We could still get a higher high here in the S&P, but I think we're getting close, and I'll show you that in just a moment at the end. Now we're watching the bond market here. This is the Chinese bond market. The real estate market has collapsed. And what we're looking at is the corporate bonds in this model that represent about 55 to 60% of what we're modeling here. And the government and sovereign bonds is the rest. So this is the Chinese bond market, right? I mean, I want to watch the Chinese bond market because it's important. You notice here in 2025, when we had the market correct down, that the Chinese bond market still had to price back up into the channel, and it did. And you notice it's all the way here into waning and collapsing velocity. The Chinese bond market is looking like there's going to be some problems ahead. So let's finish off here with the S&P. We still haven't hit the black line on this particular model, and that kind of jumped out at me. See, we're pink here. I showed it on black on that other one, but we still have a little bit of room left on this. So I've got targets here probably up to around 78, 76. That would be something I would be real interested in. And we'll see. If this thing wants higher, 78, 76 to maybe 8,013. Let's take those two middle numbers. 77.28 on the low end. And if it really wants it, 8447 to finish it off. We're somewhere in one of these numbers between 77.28 and 8447 to finish this final wave 5 blow off top. That's it today. Thanks for tuning in. Any questions, email me. You want to get a hold of me, Destiny, DSTNY, trading, TRADING @gmail.com. And thanks for tuning in. See ya.